Yo, everybody, welcome back to Ticker Breakdown. What if I told you there's a company that powers over 99% of the world's smartphones? A company whose technology is inside virtually every connected device you own? Now, what if I told you that same company is trading at a valuation so high it makes even the hottest tech stocks look cheap? Is in a brutal legal war with its biggest customers and is facing existential threat from a free open source competitor. This is a story of ARMS Holdings. It's the architect of our digital world, the hidden engine behind the AI revolution, and quite possibly the most high stakes, high risk stock on the market today. Is ARM the future of computing, or is the valuation paradox about to pop? Let's break it down. First, you need to understand what ARM actually does. Unlike Intel or Nvidia, ARM doesn't manufacture or sell physical chips, they are the architects. They design the blueprints, the intellectual property, the power, efficiency, processors, and they license those designs to everyone else. Think of it this way: Apple, Qualcomm, Samsung, they all pay ARM an upfront fee to use their blueprints. That's licensing revenue. Then, for every chip they sell and produce using those blueprints, they pay ARM a small fee. That's royalty revenue. When you're talking about billions of chips a year, those small royalties add up, giving ARM an incredibly profitable business with gross margins consistently over 95%. This model made them the undisputable king of mobile. But now they've set their sights on a much bigger prize: AI. And that brings us to the bull case. First, the data center offensive. The AI boom has created an energy crisis. Data centers running AI models are incredibly power hungry. ARM's core advantage has always been power efficiency. Their server chips can use up to 60% less electricity than the competition. That's a game changer. This is why Amazon, Google, Microsoft are all building their own data center chips using ARM's Neoverse platform. And here's the kicker: Nvidia has exclusively chosen ARM CPUs to partner with its world-beating Grace Hopper and Blackwell AI superchips. This creates a powerful team, forcing the entire industry to follow their lead. Second, cars are becoming computers on wheels, and ARM's designs are at the heart of everything from digital dashboard to the advanced driver assistance systems in cars from BMW, Mercedes, and Rivian. This is massive, long-term growth market. And third, ARM isn't just selling more blueprints, they're making each blueprint more valuable. Their new ARM V9 architecture comes with a much higher royalty rate, potentially double or even more than the previous version. As every new high-end smartphone and data center chip adopts V9, ARM's revenue could explode without selling a single extra unit. So you have a company conquering the data center, driving the future of cars, and systematically increasing its prices. What could possibly go wrong? Well, that leads us to the potential bear case. Start with valuation. ARM is trading at a price to earnings ratio of over 200. The industry average is around 33. Its price to sales ratio is over 40. These numbers are astronomical. The stock is priced for absolute perfection, meaning any tiny misstep can send the stock tumbling. The biggest long-term threat is an open source insurgency called RISC-V, pronounced RISC-V. It's a completely open source, royalty-free chip architecture. Anyone can use it to build chips without paying ARM a dime. This directly attacks ARM's entire business model. RISC-V is growing incredibly fast, with shipments already in the billions, and has powerful state backing in China, which is desperate to break its reliance on the Western tech. Then there's Qualcomm. ARM is in a nasty, high-stakes legal war with Qualcomm, one of its biggest customers. ARM sued to block Qualcomm from using technology from a company it acquired, but in the stunning turn, a jury largely sided with Qualcomm. Now Qualcomm has gone on the offensive, filing antitrust complaints against ARM around the globe, accusing them of abusing their market power. This legal battle is costly, distracting, and just threatens the very license model ARM is built on. Finally, there's China. Over 20% of ARM's revenue comes from China, but they don't actually control their business there. It's run by an independent entity called ARM China, which has been described as opaque and a significant risk. So you have sky-high valuation, a free competitor gaining steam, a legal war with a top customer, and a major geopolitical risk. Let's get on to my final verdict. Here's the bottom line. ARM is without a doubt a phenomenal business. It's a critical business. Its technology is foundational. Its growth story in AI, data centers, and automotive is powerful and real. But the stock is a different story. At these prices, it's high wire act with no safety net.
The market has already priced in the most optimistic scenario for the next decade while seemingly ignoring the very real legal, competitive, and geopolitical risks. The investment thesis hinges on management's ability to pull off a delicate balancing act. They have to squeeze more money out of their customers to justify the stock price. But if they squeeze too hard, they'll just push those same customers into open, welcoming arms of RISC-V, or RISC-V rather. For me, ARM Holdings is ultimately a great company, but a risky stock. The technology is a long-term winner, but the stock is a high-risk gamble. I hope you guys can kind of differentiate that. Like, the company is really good, solid, but the stock itself is priced very high. A prudent investor might want to admire this incredible company from the sidelines, at least until the valuation comes down back to earth, or some of these major risks are resolved. The story is incredible, but the price of admission is dangerously high. Let me know what you guys think in the comments. I think I'm going to sit on the sidelines and kind of just watch how this plays out. There's a little too much risk for me involved that is out of like this company's control right now, especially with the lawsuits. Let me know what you guys think in the comments.